They also want to see your assets. Now, when we think in terms of assets, sometimes people are like, well, I don't have any because I don't own a home. If you have full equity in your car, they want to know about that car. If you don't have a lot of equity in your car and you're still making payments, they still want information about that car, how much you owe, what the payments are, and they are also going to take a look at what that car could possibly sell for. Because if push comes to shove, if it's not going to put you out on the street or affect your income, they may require you to liquidate assets in order to be able to pay them.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, welcome to episode 38. Last time I talked about the tax relief journey to kind of give you an idea of the actual process of tax representation from the professional side. Because as I told you, there are clients that I work with and they really don't understand the process and there becomes miscommunication, so it doesn't flow as easily. Well, after I did that episode, I said, why don't I give them a little bit more insight into one of the main forms used to negotiate their situation? So today in episode 38, we are going to talk about Form 433F. And when we are negotiating, unless you're doing an offer and compromise, you want to make sure you just have Form 433F and not Form 433F OIC. Okay? So again, when I did the tax relief journey, that absolutely had the taxpayer in mind because you all don't talk taxonese, right? And sometimes as we're explaining the process, we don't take the time to make sure that you actually understand it. I had a client that I worked with, and they questioned every single piece of documentation that I requested. It was always, why do you need that? I've never had to give this information before. And I'll admit, initially I was offended. I was like, yeah, this ain't gonna work. Because I don't have an issue at all with people asking questions for understanding, but it felt as if they were questioning my expertise and I was making up stuff. Then that's when I realized if people don't understand Form 1040, which is your tax form you file every spring, why in the world would they understand this form, the 433F, right? So I was able to go over the form with them and say, hey, this is the information that this form is requesting, and this is why I'm asking all of these questions. I personally don't care about your retirement account. I don't care about your checking account, as long as the payments that you make to me don't bounce or go back, right? But the IRS does want to know that information if they are going to allow you to pay less than you actually owe. This is why I always say the best clients give me what I need when I need it, because I know what the IRS is going to ask for when I get on the phone with them. And that is why I'm sharing this with you, because it aligns with my mission to fill the tax literacy gap one taxpayer at a time. If you actually understand what I'm doing and the purpose of what I'm doing, then hopefully, like I said, hopefully you won't end up back in this situation again. You are going to have to turn in information that you've never had to turn in before. You want to know why? Because you've never been in this situation with the IRS before. Okay? So we're going to talk about Form 433F, which is a collection information statement. Okay? We're going to talk about the purpose of the form, what type of information they need for the form, and if you really have to give this information to the IRS. Okay? So with the collection information statement, we are going deeper than what you turn in on your 1040. Now, this form is supporting documentation for an installment agreement. We talked about installment agreements way back in episode 10. So if you want to learn about the different type of agreements there are, you can go back and check out that episode. If you are going to do this DIY and it's not a streamlined agreement, which means that you can't pay it in full within 72 months or before the collection statute expiration date. I know that was a mouthful, but just to recap, the collection statute expiration date, or the CSID, is the final date that the IRS can collect. And they're going to do everything in their power to make sure that they get some payment before that date comes. Okay? So if you can't pay the amount in full before that or within 72 months, the IRS is going to want additional information. Okay? If you owe over $50,000, the IRS is going to want additional financial information. And we turn this in on Form 433F. So majority of my clients, because they are going to owe over $100,000, because that's my threshold, the market that I go for, I already know I have to fill out this 433F and I get their collection information. If you were doing this DIY and it is streamlined, you can use Form 9465 to request the installment agreement. Now, I have a video that goes over that on YouTube, so I'm not going to go into all the details here. I will let you know this, though. If you e-file that form with a tax return, or if you decide to mail it in, you are going to pay a $225 setup fee. All right? The reason I point that out, remember, I'm on your side, right? I'm here to fill the tax literacy gap. If you do this online or by phone, that fee gets significantly reduced to $31. All right. And if it is a streamlined agreement, this can be done online. Now, you may not need me to walk you through that process on an actual consultation, but I do still have my ebook, Guaranteed Installment Agreement, available at americasfavoriteea.com, and you can purchase that and have your agreement set up within 30 minutes to an hour. All right. But getting back to the form with the 433F, and we're looking at the purpose of it, this form is used to collect the current financial information necessary to determine how a wage earner or a self-employed individual can satisfy their debt. All right. If you say I can't pay this one within 72 months, this form is the IRS saying prove it. Okay. So when they're asking you to prove it, you are going to have to turn in income information, but your income may be different than your last tax return, right? So what the IRS does, they say, we want your current information. We want the last 3 months. So just throwing this out here, for some people, you may have a tax situation where you can DIY. For others, you may have one where you have to have a tax professional. You all know that I will never judge your tax competency, right? However, if you were in a situation where you cannot afford to pay this within 72 months, but you can afford to pay something, I would recommend at least having a consultation with a tax professional, even if you don't retain them to do the actual representation. And this is why. The IRS wants your current information. They'll say the last 3 months. However, when working with a professional, we know that they can have the last 3 months, 6 months, 9, or 12. And for self-employed individuals, or for people who may have been out of work and they're just now getting back on their feet, that can make a significant difference, right? I was working with somebody and they just started working and they're catching up on bills and they're like, oh no, now I'm making all this money, I'm not going to qualify. I said, wait a minute, but how long have you not had steady income? My job as a tax professional representing you is to make you look as pitiful on paper as possible, which that may sound bad, but that's my job. It's to negotiate the best setup for you that's going to satisfy the IRS and not bankrupt you, right? So when we're looking at this, the type of information, they want income, but not just income, they want your cash flow. So they want to know what you're getting paid and how often you're getting paid. So if you are a wage earner or if you're receiving a pension or Social Security, They want to know how often you are receiving that. Is it where you get paid monthly, like Social Security? Or on your job, are you getting paid every week? So when we turn in that financial information, we can't just say, hey, this is what I'm getting paid. We also are going to have to substantiate that. All right. I'm going to talk a little bit more about that in the next episode. They're also going to want to know, what do you owe other people? Because typically, in my experience, which of course, I've only been doing this 12 years, right? If you owe the IRS, you owe somebody else too. And the IRS wants to see how tight your cash actually is. But that does not mean that they're going to allow that debt to be an allowable expense. Let me explain. They will ask for your credit card information and to see how much credit you have available on those cards and those different lines of credit and account. However, this doesn't mean they're going to allow it as an expense. They want to see how much wiggle room you have because you could use that line of credit to make payment to them, right? Last but not least, they also want to see your assets. Now, when we think in terms of assets, sometimes people are like, well, I don't have any because I don't own a home. If you have full equity in your car, they want to know about that car. If you don't have a lot of equity in your car and you're still making payments, they still want information about that car, how much you owe, what the payments are, and they are also going to take a look at what that car could possibly sell for. Because if push comes to shove, if it's not going to put you out on the street or affect your income, they may require you to liquidate assets in order to be able to pay them. All right. Another thing that people don't take into consideration if they are a business owner, the IRS wants to know about any accounts receivable you have. All right. So if you are a business owner that does work up front and then you bill people, they want to know about all of your open invoices, because you may say right now, hey, this is my cash flow, but they're going to look at those accounts receivable and say, hey, this is the predicted cash flow that we have. So you want to make sure that you understand all of this, because you may not willfully omit anything, but you don't want to give the IRS any ground to say, hey, you left this out, you were trying to deceive us, we need you to actually pay the money faster, or we are going to go ahead and issue tax liens on these different tax years because you aren't being upfront and honest with us. Now, I'm not going to go into all the details about what a tax lien is right now, because guess what? I've already covered that in an episode 2. I don't remember the number right now, but we will have it in the notes for you. So if you want to learn more about a tax lien and how to get rid of that, you can go back and check out that episode. Now, you may be thinking, this is complete government overreach, right? I'm not going to give them my bank account information. They don't need to know about my accounts receivable, any of my debt, or my cash flow. As an American citizen, do I have to give this information? Well, my friend, I'm sorry there's not more of a straight answer, but it actually depends. You see, when we're negotiating with the IRS, there are certain things that you absolutely do have to give them, because you're at their hands. You're looking for their mercy because you owe them, not the other way around. And then if you look at it from their point of view, you're coming and you have the audacity to say that you can't pay it in full, and then you don't want to prove why you can't pay that. However, I say it depends, because there are certain things that you aren't going to have to substantiate, because we have something called the national standards and the local standards. Very similar to the standard deduction with your tax return. If your expenses are underneath a certain amount that they already have set, that's okay. You're going to get what the standard is. Now, I'm going to cover that more in episode 39. So if you have questions about that, make sure you go ahead and check that out. But in order to determine if you have to give certain information, if you are not working with a tax professional, I highly recommend that you book a consultation with one. Now, if you work with me and go to Bowens Tax Solutions and you book the tax relief consultation, we are going to spend an hour with me learning about your situation so I can actually give you a diagnosis. And yes, this is going to be a paid diagnosis, because if you went to a mechanic because your car was leaking oil, or if you went to a doctor because you're having chest pain, you are paying for that consultation. Now, similar to those appointments, I will give you paperwork to show what my diagnosis is and what I think you should do. Should you decide to retain me, that's fine. If you decide to go elsewhere, best wishes to you, because on my journey of filling the tax literacy gap, I 100% believe it may not be me, but you need to get the help that you need. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.